Hello, I'm Sergiu Draganus, the organizer of the world's first tokenized event, and I'm very happy to have you all together joining the event today. I'm the moderator of an amazing panel related to the future of the crypto investments, and I would like to do a short intro for the panelists present today in the event. As you know, it's Miko Matsumura, the founder of EverCoin. Probably many of you already know Miko from different other events related to crypto. Miko is a general partner in Gami Cryptos, and he is related to several projects related to crypto. We have also Christian Kameir. Christian Kameir from Sustany Capital. He is the managing partner of venture capital firm investing in blockchain and decentralized finances solutions. We have also Xavier from DCL Luxembourg. He is the founder, the executive director, and the CEO. DCL group is related to EuroDNS and VoidGet projects with pretty high notoriety. And we have also present here Jose Macedo from a partner at O1 Capital. Previously, he held the advisory department at Amazix, and as most of us know, Amazix is a company who helped many blockchain projects increasing awareness and managing the communities to boost their audiences. So I will start with the first questions for this panel. In your opinion as investor, what is the primary invention introduced by the blockchain, and what innovation does the paradigm enable? So please, if you want Christian to take this question from the beginning.
Yeah, sure. I mean, I assume everybody at some point in time read the Bitcoin white paper, right? And if you haven't, please do, and please do so again, because it's very important just to embrace it, really what the title itself says, like the invention of peer-to-peer cash. And more often than not, what we find in our daily business, that a lot of projects haven't really embraced that yet. What I mean by that, the real invention that the Bitcoin white paper provides is not blockchain technology, right? Blockchain technology is obviously not even referenced, is not even mentioned. There's a footnote 2, that references a timestamping mechanism. And so that's actually the blockchain technology part, and that was invented in 1991. So it's the idea of hashing and timestamping data in a consecutive manner. So whenever people talk about blockchain technology, what they're really talking about is this particular encryption scheme. And so whenever you enter a new space, doesn't matter if it's technology or something else, you want to learn the language first, because your basic building blocks, your technology, if you will, is your language. And on a daily basis, that's what we see people really not doing. So we ended up with a lot of metaphors that make up the space. So we're talking about coins and tokens and mining. Obviously, there aren't any coins, there aren't any tokens, and there is no mining going on, right? Those are all metaphors that we use to explain what's happening technology-wise. But I think it's very important as a technologist that you understand that the real invention is actually that of the peer-to-peer bearer instrument, as expressed by solving the double spend problem, right? The quote-unquote unstoppable code. And it's not really obviously unstoppable. It's just the fact that you can usually see it was executed, and everybody can see if and when it will be reversed. So that then consequently creates a digital bearer instrument. And just real quick, the usual bearer instrument that everybody will be familiar with is your US dollar in a printed fashion, as in I hand it over to you, you have it, I don't have it anymore. The transaction is settled, you don't need to know my name, it's anonymous, so there aren't any transaction costs. So if you realize that those are the tenets of peer-to-peer cash, you also realize that we never got that, right? So to this day, we don't actually have peer-to-peer cash, because obviously there are transaction costs right now. So at this point in time, we actually haven't fulfilled the original promise of the Bitcoin white paper itself. So knowing that, a call to action, please create, if you want to stick with the metaphor of mining, create a minting function for blockchain. But more importantly, realize what you're trying to build usually will be a peer-to-peer bearer instrument that is digital in nature. So keep the tenets in mind, as in it needs to be anonymous, it needs to be transaction cost free, and it needs to ideally instantly settle. So once you understand that, then you can build the right technology. Sorry, that was a little longer than you expected, I assume.
Yeah, I think it's a very good approach here. And in the same time, I have here an additional question related to this one. How does it work related to the current regulations available, basically, in the US or in Europe? Because we know that the technology gives us the huge advantage to create amazing things, but currently the regulations keep us down. They are keeping us still down. I mean, we have several examples here in this panel of amazing projects which can be scaled up extremely high, but the regulation still makes some problems when you talk about the tradition, the interaction with the traditional fiat industry.
I mean, we are technology investors, right? So what I usually say is, if you need to comply with any regulation, you have to understand what the technology is delivering on, because the default interaction in any open society is that of private enterprise. So all those regulations that you typically see, they don't apply to people doing peer-to-peer transactions. They apply to custodians, they apply to intermediaries and so forth. But as a default scenario, that's actually not the case if you're handling these instruments by yourself, right? And that's the main confusion in the space. I'm unfortunately plagued with both somewhat of an engineering degree as well as a law degree. So, and I'm favoring the engineering part very heavily.
Yeah. So please, for the same question, I feel that someone else wants to add more. So
I want to go back to the first question, actually, which is, I think Christian really did hit the nail on the head by scoping it fairly narrowly, but I want to expand it slightly, which is obviously the intention of peer-to-peer electronic cash is unfulfilled, but I think it is important to look at the idea that a history recording consensus ledger technology has been created, right? And that this consensus principle of a distributed and durable history is actually fairly novel, right? So the question then becomes, well, what is the expected scope of applications? And I think the applications that would make sense relate to things like ensuring that there's trust across potentially, obviously requiring multiple parties. So multi-party trust applications. And typically when you involve trust applications, you're involving things of value being transferred, right? So I'd like to really kind of open it a little bit to potentially, internet of value transactions, starting with financial services, so obviously cash is an application, but I would say that if you look at other potential applications, it really has to do with creating a consensus trust fabric, so it's sort of multi-party trust, sort of history recording, distributed ledger. But let me open it up a little bit and see what other people have, especially on the regulatory topic.
I'm probably going to open it up even a bit more. I mean, at the risk of offending Chris's engineering brain, my background comes more from sort of, I was a professional high stakes poker player before this, so I come at it very much from a game theory and incentive perspective. And for me, what this is a new form of sort of human cooperation and a new kind of business model for digital networks from my perspective. So I mean, networks from the beginning of time are what kind of allowed us to cooperate and evolve as a species, right? From family to money, religion, physical networks like roads, and now, of course, the kind of all-pervasive digital networks. They form the lifeblood of civilization. And I think the big thing about networks is they follow rules, right? And you need someone to enforce those rules. And normally, what we've done in the past is we've appointed some kind of centralized entity that enforces those rules, whether it's the patriarch, priests, governments, central banks, corporations. There's some kind of corpus, central corpus that's in charge with enforcing those rules. And that's kind of how we've, that was why also the invention of the joint stock company and the invention of the corporation was so big. And for me, what we're seeing now is we're seeing the limits and the breaking point of that model. With digital, these networks have gotten so large that the power of the network operator has increased and imposed like additional costs on participants. Whereas a small network, maybe participants can keep the network operator in check. I think as these networks grow massive, money grows massive as Facebook, Google, Amazon grow massive. I think that the costs imposed on participants grow massive as well, whether it's the use of our data, whether it's the loss of innovation, loss of permissionless innovation from having these closed platforms. I think all of that are costs on participants. And for me, what blockchain does is, for the first time in history, I think, enables the creation of networks that aren't controlled or owned by anyone, you know? So rather than a centralized platform operator, what we have is a system of crypto economic incentives, code, and consensus rules. And so you don't have to trust one entity, you have to trust the underlying incentives. And I think what this does is open up a new form of coordination that started off with money and Bitcoin challenging central banks, you know, the peer-to-peer digital cash, and then moved on to other things that we're probably going to discuss later on.
Yeah. Sabi, if you have something.
I would like to add something here. So what Jose just said is not trust a single entity. And if I bring my head as a VC or business angel, I would also say that the technology also, additionally to removing this one trust entity, also is a big matter of cost reduction and optimization of the flow and automation of processes that comes along with it, making it then in huge cost reduction and even eliminating middlemen and intermediaries that also in this industry, in this world now, take huge amount of money out. Taking examples of solutions in the supply chain management and the food safety tracking, going to everything around voting or around of course, tokenization is the most known aspect, but also notary world. So there are a lot of business applications and areas where this now will come in play, and where as an investor you will look at it at especially what problems is it solving and what is the efficiency on the cost side.
Yeah, exactly in this direction, Xavier. Basically, what investment trends do you see blockchain enabled in the next 5 years? Because you've already mentioned the supply chain part and the cost optimization in several different industries. What do you think will be the one which will be the most, the ones that will offer the highest opportunities for investors?
So investors will, as I said, so investors will definitely look at the solutions and what is the problem that is being solved, especially on the cost cutting side. And also on, of course, the trust level of the solutions. Right now, what I see most is where the business angels and investors are looking for is everything around, of course, the financial sector and RegTech around digital identity, solving that part. What I just mentioned, the logistic part with the supply chain management, and especially also around everything around food safety or food tracking, together with IoT, combined with IoT that automatically feeds data, is also a very hot topic. Another one, but where the benefits and cash-wise is not so strong, is everything around intellectual property. But the business model is not that clear right now. The entire world around notaries and so on is too much linked, is also an aspect, but too much linked to regulation, too heavy. So it's always a matter, where is the regulation, what will be the lobby that you will be facing, and what makes sense. So there are a lot of variables to analyze, and but a lot will change, and investors are following that very closely.
Thanks.
Yeah, I just to provide a little contrast for the audience, you know, I'm less bullish on supply chain. I'm because of the problem of incentives, you know, so there's proof of inspection. So you have kind of weak off-chain proofs moving on chain. So it's essentially an Oracle problem, you know, so I'm not confident about that. I would say the other one is, you know, not particularly confident about, you know, intellectual property type of things, you know, so as far as vertical industry applications, you know, our fund looks exclusively at financial services industry vertical, and, you know, payments and remittance and, you know, financial securities and, you know, a number of these types of topics, you know, futures, derivatives, options, you know, so it's very financial stuff. And then whether it be retail or crypto or institutional. And then on the other vertical that we're interested in is we're interested in DeFi and the intersection of DeFi and gaming. So, you know, gaming and financial services, we think, are fairly early adopting for this type of technology. Others we feel are lagging.
Yeah, very much the same on kind of echo those comments on my front. I think the problem, the Oracle problem is a really good way to put it. From my perspective, it's just, we want to focus on industries where the underlying asset is or can be digital and thus represented on chain. Because the problem when you have a kind of physical asset or something that's off chain, a house, stock, intellectual property, is that what you're trading on chain is always an IOU, right? And ultimate settlement doesn't really happen on chain. Like you can always go to the legal system and effectively like revoke that settlement. So, if you have a security token and Warren Buffett holds his Coke shares as a security token and some 17-year-old hacks his account, that guy doesn't own 7% of Coke, right? Like Coke can just revoke the shares. And I think that's a problem with all these off-chain assets, which is why we're also really interested in finance, because finance is virtual. Money is virtual. It's always been sort of a social technology more than anything. And then gaming as well. Really interested in sort of in-game economies, how that's going to meld with DeFi, the ERC-721 and the NFTs we're really interested in. So yeah, those are the areas that we're looking at the most as well.
Thanks. Christian, please.
Yeah, so what Miko, Xavier, and Jose said is all utterly correct. And I agree with absolutely most of what they have been saying. I think the most important thing to realize is that all the value that's being created and all the alpha that can be generated is in the on and off ramps, because that's where all the work needs to be done, and that's where all the friction is currently. And there's not enough work to be done, not enough work that's being done there right now. What I mean by that is you can technically obviously not invest in blockchain. That's like invest in internet. That's obviously nonsense, right? What you're investing in is in removing the friction. And so there you can think of intake systems that then take large-scale documents and digitize those in a protocol form, right? Where they can then build the beginnings of quote-unquote digital assets. And that's unfortunately also a very, very abused term, as in there's very few really digital assets in the narrow sense, as in your lowercase b Bitcoin, the Bitcoin mining reward is a digital asset because it's digitally native, and some tokens are like NFTs can be digitally native. But again, if you're using terms like tokenizing houses, tokenizing other assets, that's again just a metaphor. From a technical perspective, it doesn't make any sense because the token is the peer-to-peer bearer instrument of a public blockchain. Obviously, you can't move it this way. It's like digitizing. It's like saying I took a digital picture of a house and I digitized that house. No, you didn't digitize that house, right? And again, there in the early days, and unfortunately still, there was this theory that was circulating around the blockchain space of the flat protocol. That's utterly wrong, obviously, right? So there's very little value in the protocol itself, just like there's hardly any value in the voice over IP protocol. Value is in putting out an application that runs it, like a Skype, right? But for that to happen, you need to actually onboard the user, and you also need to quote unquote onboard the assets. And this comes back to what I said earlier. We still haven't realized digital cash for that matter. So once we see that, everything else will fall into place. And we recently started to look at supply chain again, and there you see kind of the same problem. It's exactly what Miko said earlier, because the onboarding in supply chain, as far as the physical good is concerned, will always involve humans. But in order to onboard those, you actually need to have a useful identity protocol on public mainnet, which is really to say you need to have cryptographic primitives that are not recorded on the blockchain itself. That's one of the main fallacies. The ledger component of a blockchain is almost always never used to record anything. It's just to signify the transaction is settled, right? Because at the end of the day, if you're going to a market and someone hands you a loaf of bread and you hand over your digital cash and the transaction is settled. So the whole goods transfer is settled. You want to achieve the same thing. You don't necessarily care where I got the cash from, neither do I necessarily care where you got the bread from. That's some nuances that we want to introduce later on if you want to buy, let's say, ethically farmed produce and so forth. But at the moment, that's not the main problem we're trying to solve. At the moment, we're trying to solve the problem that transactions aren't immediately settable on a blockchain-based implementation, if that makes sense. So everybody needs to focus more and more on those off-ramps. And last word to that is identity will not be solved on blockchain, right? For obvious reasons. So identity will be addressed on a graph-based solution.
Yeah, in this direction, I've on all your answers, I've understood. I feel something very important: the trust part and the security part. Jose would mention a little bit earlier that the product can be hacked. I think all of us already had some unpleasant surprises with this technology, starting, I don't know, with the Ethereum Classic, with the fork, with whatever. So here I would like to hear your opinion about how important is security, because we think, okay, Bitcoin sounds nice, Ethereum sounds, other projects sounds very nice, and they are trustable. How trustable? How much trust can we put in them directly? And is the case to use them or to add some additional services to improve the trust?
So I'm passionate about this topic because when I got first started in Bitcoin, I got hacked, and this is a classical SIM swap attack, and I believe that one of the biggest issues with actually onboarding people, as Christian pointed out, into this new paradigm, is really to provide better user experiences. And, one of the fundamental user experiences is not to lose all your money. So to me, this is fundamental. And because of this, I actually launched an information website called safercrypto.org. And, you can get a lot of really interesting tips and tricks about how to secure your digital domain, including privacy, but, also including digital assets. So, I just wanted to throw that in the pot because, I'm pretty passionate about the topic of personal cybersecurity. And I think in terms of trust and cybersecurity, really we need to focus on the most reliable and proven assets. And, I think obviously, people who deploy risk capital like us, we can venture a little bit further out, but I would say that the general public should not be making wild investments into speculative assets.
Thank you, Miko. So I think we'll have only a couple of minutes left, so I will have another question from all of you. So I understand the type of projects that are interested in for the investors. I've understood this part. But if we have a project in area, like financial area or gaming area, would you go for a simple projects in the gaming area which solve a very simple and clear task, like for example changing items into different games or betting or something like this? Or are you looking for some sort of project that are going for moonshots? I don't know, going to change the world from a specific perspective. I don't know. Really,
I think everything has to start simple. We're an investor in OpenSea, which is the world's largest marketplace for NFTs. So sales marketplace is simple. We're an investor in Bling Financial, which just rewards users for playing mobile games with Bitcoin. It's all simple, right? So, for me, simple things, that's where you start. Obviously, the details get complicated, but, I think really solving a clear pain or solution for a user is what matters the most.
I fully agree, and the classical rule of investors don't change here. Right? It's not because it's a crypto world that it changed. You still look at the business plan, you still look at what problems you are solving, and you still look at the quality of the team. So all the rules of investment are still applicable. Nothing's changing actually.
Okay, thank you. Something else to be added?
Well, there's this old adage in our vertical that says being too early is the same as being wrong.
Yeah.
And that's what we're seeing over and over again today, where a lot of people are way too early for certain solutions. And oftentimes we'll make this relationship to the current state of blockchain, to the state of dial-up. I don't know how many guys of you are old enough to remember acoustic couplers. In my mind, that's exactly where we are. We're still acoustic couplers. We are still jamming like a phone receiver into some nozzle on the desk, hoping that someone on the other end will create it. When I create those DTMF tones, will actually receive them. That's where we really are, right? Because in order to actually participate in the quote-unquote ecosystem, you first have to jump through many, many hoops at the moment. And so we need to do away with that.
I would agree. Yeah, I think we're much earlier than most people think. I think when you look back at like obviously I didn't invest through it, but when you look back at the .com bubble and see some of the companies that were launched there, Pets.com, you know, the delivery companies, all of them were ideas that now exist and are successful businesses. You know, that they were just sort of 10 to 20 years too early, right?
Yeah.
And with a lot of those businesses, there was just a lot of infrastructure that needed to exist for that to be viable, right? Like Uber relies on GPS, it relies on simple payment APIs, it relies on a bunch of tech infrastructure that had to be built. And for us, it's about kind of identifying where these spaces are going, what infrastructure needs to exist. We don't really want to be investing in anything that relies on infrastructure that hasn't been built yet. And at the same time, then when we're looking at infrastructure, we have to look at, is this sort of infrastructure that you can capture value for, or is it stuff that's just really useful? I mean, an example is sort of Cosmos, right? Like Cosmos, consider incredibly useful infrastructure. Like Cosmos SDK is really useful. There's really cool stuff built on it, but actually the value capture of the Atom token makes less sense, right? Because there's no real need. I mean, you can use the Cosmos blockchain for security, but you don't have to. And so I think that's one of the issues with investing in infrastructure is you don't only have to determine whether it's useful and whether it will succeed, but also that even if it succeeds, will it be able to capture value, especially with these new sort of new financial instruments that tokens represent. You know, there's a lot of misinformation and a lot of just a lot of token models that don't really make much sense. So I think those questions are important as well.
Yeah. Okay, then thank you for your time, first of all. Thank you for your answers. I'm very glad that I had you here in the panel. So thanks again. We'll have to close the panel right now. The other one will follow in the next 3-4 minutes. So thank you, guys, and hope to see you again in the next edition of the Virtual Blockchain Summit. All the best.
Okay, thank you.
Thanks very much.
Thank you.
Bye-bye. Bye. Bye.